Call 356-9397. Opinions and views expressed represent those of the guests and do not necessarily represent those of the station. And now, Paul Ruedi's On the Money.
On the Money, I'm Paul Ruedi. I'm here today. We have a light version today, or a light cast version. Not lightweight, but just fewer. I have David Ruedi, Certified Financial Planner Professional, with me at Ruedi Wealth Management. David, did you miss me? We were gone in Texas.
It was really quiet in the office.
Yeah, I know what you're trying to say.
Brian was gone too.
And I'm going to try to get Dr. Fred Gertz on the line. Dr. Fred is traveling today on the way to California, I think. Is that right, Fred? Fred, are you there? I'm going to try to get Fred. Fred, are you there?
I can hear you.
Oh, good. So you're traveling today, but we have you on. We may just have you on for a condensed period since you're traveling. But there are certainly some things I want to get to. One was your article.
Yeah, actually, I'm traveling longer than I expected, so I have more time than I thought. So anyway,
okay.
I'm fine.
Okay, good. Anyway, so you can call us in with your questions at 356-9397, or you could text us on the Castle Heating and Cooling text line at 351-5357. You can also email your question to talk@wdws.com. And we also want to welcome those tuning in on Facebook Live. Sorry you have to see me like this. It's important to recognize that past performance is not an indication of future results. You should not make any investment decisions without first consulting your own financial advisor and conducting your own research and due diligence. Well, Fred, one of the things I saw was your article, even though I was traveling on the 529 plans. And there's
right.
And we might leave it at this, Fred, because there is quite a bit of background noise. That was something we've talked about before, but it looks like that program's really in some pretty big trouble.
Right.
That's the prepaid tuition, the prepaid tuition side.
The 529 plan is fine. The prepaid tuition plan has some serious problems that we've talked about in the past. And the problem is that the funding is just not there. They originally started the plan with the expectation that tuition would be fixed in the future, but tuition has gone up much more than the expectation. So it's sort of like an underfunding of a pension plan where they don't have enough money in the program to pay off all the promises. And the difference is, though, that the state of Illinois is legally not necessarily responsible for that. So it's a very sad thing for the people who are involved in that they've paid. They expected to have their tuition taken care of, and it may not be the case now.
Yeah, and again, I misspoke on that. I didn't mean the 529. That's the defined, more of the contribution where you put your own money in, and that seems to be as solid as ever. I have zero concerns about that program. Do you have any concerns about that side? I frequently get, Fred, as an aside, from clients or typically grandparents that are trying to pitch in and help with grandchildren's education. They even worry a little bit about the 529 side of it, and I've always assured them that at least I have zero concerns about that. What are your feelings?
There's absolutely no concern about that in regard to the soundness of the plan. The problem with the 529 plan is that you're basically depending on the investments. So the investments are not guaranteed. So if the market crashes or something of that sort, your assets would go down. But
Sure.
There's absolutely no problem about being underfunded. So it's like a defined contribution plan where you have to depend upon the performance of your assets.
Okay, I just want to be sure about that. And it seems like the economy's still rolling along. It wasn't 6 or 7 weeks ago. Everybody was it almost seemed like near certainty that the economy was maybe going into a recession, and a lot of that talk. Very little recession talk. In fact, I haven't seen the word recession in articles for maybe several weeks now.
No, I don't think so. Again, somewhere, sometime, someplace there'll be a recession, but there's nothing particularly on the horizon now. It's natural to start thinking about that because we've gone now 10 years of expansion, and that's a very long time. But there's nothing that says that 10 years is the max. So again, it's always a concern. But as we've said many times, even if you knew one was coming, there's not a whole lot you'd have to do or should do, aside from simply sticking with your plan.
It's just interesting to see how the sentiment turns. And I noticed, I read an article where Jamie Dimon, I think it was on CNBC's website, who's the CEO or chairman of
JP Morgan.
Yeah, JP Morgan. And in his article, of course, it's just one person's opinion, but it was certainly the other side saying, look, this economy could not rock and roll, those are my words, not his. This economy could continue to defy the recession for years to come. I'm paraphrasing.
And we're also sort of the top of the ladder. You think everybody thinks the United States has all the problems, but if you look at expectations about growth, the only place where growth is expected to be higher is New Zealand and Australia. The rest of the world, at least the rest of the developed world, the U.S. economy is predicted to grow faster than almost everyone else.
Yeah. So, and I did notice though, and that is certainly true, David, that it's not just the U.S. stock market and we're going to talk a bit about this today, but even the international side of the component for the global stock market is really starting to do a lot better, and that could add to maybe returns of investors at the same time. Speaking of which,
yeah, that's a little bit slow.
Go ahead, Fred.
That's been slow the last several years, so there may be a catching up there as well.
Yeah, I was going to say it's about time.
Yeah, it's been years, literally. When speaking from a stock market standpoint, if you look at relative performance, there's been quite a lag on the international side outside of the U.S., and that'll certainly be for global investors. It will certainly be a welcome sign. And I just noticed, I had sent the guys, Fred. I think it was not this past Friday, about a week ago Friday. I said, hey, the people that are in a balanced type of portfolio, 60% stocks globally, 40% short-term high-quality bonds, should be at an all-time new high. And I noticed that on an equal weight basis, both the Standard & Poor's 500 index and the NASDAQ index are at new highs. And it's really been quite a bit of participation. It's not just a handful of stocks. In fact, those FANG stocks that were kind of driving it up to all-time new highs, and everybody was saying that's only because those 5 or 6 stocks are doing well. They've actually been lagging, and so it'd be interesting to see what happens if those catch fire again. Volatility at the same time has been unusually low, one of the least volatile starts to the year in the past 90 years. It's been barely more than a 2%. I can't think of a market move this year that's been above or below 2%, either positive or negative. And if you go back the past 40 years to show you put this in some sign sort of proportionality over the past 40 years, all but 2 years have seen a drawdown of at least 5%. So your typical intra-year decline is on average is about 14%. But if you start slicing and dicing it, I mean, it's even been a while since we've had a 5% drawdown. And I did notice on the way to work, Dave, that the Standard & Poor's 500 index is only maybe 0.5% from its all-time high. So, and again, if people have been reinvesting dividends, they should be at an all-time high, even as of today. So that's doing a lot better for, I'm sure, people. When we think about going into Christmas Eve, which was, everybody said it was the worst Christmas Eve day for the stock market ever. There's quite a bit of panic and quite a bit of concern going into the Christmas and the holiday season, New Year season, and that all seems to have evaporated. And certainly clients are feeling better after that. And so we always like that because, it impacts us too.
I mean, it's nice when it shoots right back up about as quick as it fell. But I think, Dr. Gertz is always quick to bring up like that doesn't always happen. So it's important for people to be mentally prepared for a decline that sticks around a little bit longer. That's not a market call whatsoever. It's just saying, look, that happens sometimes. It's not a guarantee that it's always going to shoot back up like a rocket, but enjoy it when it does happen.
Well, the other thing, yes. Go ahead, Fred.
You were 3 or 4 months ago, you were right too. You said you thought it was over. I didn't think it was over, and it turned out that it was pretty much over. So again, you weren't calling the market in terms of changing people's plans. But,
no.
Your optimism actually panned out.
It didn't seem to me, Fred, that what was happening in the stock market in December and late November, it just seemed to be disconnected from the fundamentals and the facts that I saw